Unit 1, Cost of Capital and Capital Structure Theories. We are going to calculate the dividend under Walters model, under Gordon model. This is very important. The most important in a company, there are two types of share. One is called equity share, one is called preference share. Hello, my dear student. I am Dr. B.S. Subramania, called by name Dr. B.S.S., Professor in Commerce and Management, Vidhyaashram First Aid College at Temple of Excellence, MYSURU. Today, in this session, I am going to hang Advanced Financial Management 6th semester BCom introduction class. I'm very important because we are dealing with the financial management. What are the contents of the syllabus today? We are going to little bit exception. We'll go to in the next session. We'll go very detailedly. So here, what are the contents of the particular syllabus? I'm going to do it now. First, agenda. What are the syllabus contain? What are the learning outcome? Then how many units are there? How many internals we are going to conduct? What are the exam pattern? So here, syllabus, learning outcome, units, internal, exam pattern. Then we want syllabus of this. We have got a 5 chapter, Advanced Financial Management. So unit 1, Cost of Capital and Capital Structure Theories. Unit 2, Risk Analysis in Capital Budgeting. Unit 3, Dividend Decision and Theories. Unit 4, Mergers and Acquisitions. Unit 5, Ethical and Governance Issues. How it goes now? First one, Unit 1, Cost of Capital and Capital Structure Theories. Risk Analysis in Capital Budgeting. Dividend Decision and Theories. Mergers and Acquisition. Number 5, Ethical and Governance Issues. We'll move on. What are the inner contents are for each unit? I'm going to explain now. Here, first unit 1, Cost of Capital and Capital Structure, meaning of capital, definition. What are the significance of cost of capital? What do you mean by cost of capital? What is the significance of cost of capital? Types of capital, computation of cost of capital, specific cost, cost of debt, cost of preference share capital, cost. So we are going to calculate here cost of equity, cost of preference share, debt, redeemable debt, irredeemable debt. Here also preference share. Here one is cost of equity, one of cost. The most important in a company, there are two types of share. One is called equity share, one is called preference share. Equity shareholders are permanent shareholder, whereas preference shareholders are equity shareholders. We are going to calculate the cost of equity, then cost of preference share, cost of debt, redeemable or irredeemable, cost of preference share capital, cost of equity share capital, weighted average cost of capital. The problems you are going to solve here, problems, theories of capital structure, the net income approach, the net operating income approach. Both will come, totally 10 marks, 5 marks for net income approach, 5 marks for net operating income, totally 10 marks approach, traditional approach, and hypothesis. So these are all the things we are going to deal. Very important chapter. Major question will be asked for 15 marks. That goes in favor of weighted average cost of capital. This is a problem. Whereas there are two approaches are there. One is net operating income approach. Next is net income approach. So both will be asked. 5 marks, totally 10 marks, whereas weighted average cost of capital goes in favor of weight will be given for each. It may be equity share, it may be preference share, it may be debt. Weights will be given. According to that, we are going to calculate. So 15 plus 10, 25 marks coverage. Then come back here. Unit 2, risk analysis in capital budgeting. What do you mean by risk analysis? What is the types of risk we have got? Types of risk you are going to read. Risk and uncertainty. Technique of measuring risk. How the risk can be measured. risk adjustment discount rate of approach, that is discount factor we are going to calculate, certainty approach, certainty equivalent approach, sensitive analysis, probability allowance, and standard deviation and coefficient of variation. So coefficient of variation means it varies from one part to another. We call this as CV. Quotient of variation is equal to standard deviation divided by mean into 100. Here we are going to calculate the mean also. Here we are going to calculate the standard deviation. Apply the formula. CV is equal to standard deviation divided by mean into 100. Then we compare which is a more riskier. They will give the two company. You have to calculate which company has got more risk. So this goes approach here. Then we'll go with the unit 3. Dividend, decision and theory. So how the dividend will be declared? What do you mean by dividend? Dividend is a profit. Out of the total profit, all the expenditure will be deducted. Then preference dividend will be given. Whatever the profit available, that will be divided by number of equal share. That dividend, that is called per share dividend, goes to equity shareholder. First, you have to pay preference dividend, then you have to pay equity. When the company liquidate, first preference goes to preference share shareholder, their dividend, whatever the amount left over, that is divided by number of equity share. Dividend, decision, meaning of dividend, types of dividend policy, significance of stable dividend policy, determinants of dividend policy, dividend theories of relevance. We are going to calculate the dividend under Walters model, under Gordon model. This is very important. So in the examination, either of the two will be asked definitely for 15 marks. It may be Walters model or it may be Gordon model. They have got their own formulas in order to arrive the dividend. Then theory of irrelevance, the Miller model, hypothesis is also there. But generally they ask the question on most probably either Walters model or Gordon model. One question will become for 15 marks. Then we'll go to unit 4, merger and acquisition. Here we are going to explain what do you mean by merger, what do you mean by acquisition. Meaning, reason, types of combination, types of merger, motives and benefit of merger, financial evaluation of a merger, merger negotiation, leverage buyout, management buyout, meaning and significance of price earning ratio. This PV ratio means price earning ratio, problems on exchange ratio based on aspect approach, assets approach. Here ratio based on assets approach, earning approach and market value approach. And we are going to calculate impact of merger on EPS, market price and market capital. Here the problem will be asked for 10 marks. One may be ratio based on asset approach, it may be earning approach and market value approach, and impact of the merger on EPS. How to calculate? Earning per share, total profit divided by number of equity shareholder after payment of preference dividend. Here is a very, very good chapter for you. Here we are going to explain what is merger, what is acquisition. Merger means when two companies combine together and form one company is called merger. Very strong company will take over the other weak company is called acquisition. We are going to deal very detailedly in the what's called when the particular chapter comes. Then we'll go to unit 5. Ethical and governance issues. Introduction to ethical and government issues. Fundamental principle. Ethical issue in financial management. This is important. Here we are going to explain what is ethical issue in financial management, the agency relationship, transaction cost theory, government structure and policies, social and environment issues, purpose and content of integrated. Here only theory question, no problem will be asked. Generally they will ask the question, ethical issue in financial management, and we are going to explain what is ethical And what is government issue? Generally, this question will be repeated in the public examination for 15 marks. This is only theory, no problem will be asked. Then internal shows Unit 1 and Unit 2 for internal 1 and 2. Then Unit 3 and Unit 4 internal 3 and 4. Unit 5 internal 5. Here maximum mass, final mass will be awarded an average of 3 internal. All the 3 internal mass will be added and divided by 3. Then regarding the question paper pattern, we'll ask 2 marks question 7. You have to answer any 5, each carrying the 2 marks. How it will be? We have got 7 questions. You have to answer any 5, each carrying the 2 marks. This is 2 into 5, 10 marks. Part B, we ask 4 questions. You have to answer any 2, each carrying 10 marks, 10 into 2. Part C, we'll ask 4 questions. You have to answer any 2, each carrying 15 into 2 is 30 marks. Totally, it will cover 60 marks. So, 60 marks paper, 40 marks, what's called your internal. So, here first you have to go with the 60 marks, then 35% of this marks. Totally, we have to carry 40 marks coverage. So, here 35% of 60 is necessary. The balance from the internals. Books for reference. We can go with the S.P. Gupta, S.N. Maheshwari, BSM. These are the books available for 6th semester. Very good books are there, especially for this S.N. Maheshwari. Is very good book for you. So, we'll go once again. Cost of capital and capital structure theory. We are going to explain what is the cost of capital, what is cost of preference share, what are the cost of equity. We are going to wait weighted average cost of capital problems on this, and we have got a problem on net income approach and net operating income approach. 5 marks is totally 10 marks. Here risk analysis. Here we are going to ask what you mean by risk, what are the types of risk, risk of uncertainty. Here sensitive analysis. Here standard deviation and coefficient of variation. One question will be asked for 10 marks. Then we will move on. Unit 3, dividend decision and theories, introduction. Dividend, there are major 2 types of dividend. One is called Walters model, one is called the Gordon model. Generally, so either they may ask Walters model, they may ask Gordon model for 15 marks. Then Unit 4, merger and acquisition. Meaning of merger, types of combination, motivation and benefit of merger, financial evaluation of a merger, merger negotiation, buyout learning. This problem will be asked, and the exchange ratio based on asset approach, earning approach, and market value approach, and impact on earning per. EPS means impact on earning per share. The last chapter, only theory, ethical and government issues. Here, governance issues, introduction to ethical and governance issues, fundamental principles, ethical issues in financial management, agency relationship, transaction cost theory, governance the structure. Then, on policy, social environment issue, purpose and content of integrated report. So, these are all the only theory they will ask. Major question they will ask, ethical issue in financial management. Then internal 30 marks, it will be converted to 40 marks. First internal 1 and 2, second internal 3 and 4, third internal 5. All the 3 marks will be added, divided by 2. Average marks will be taken into consideration. Then regarding the question paper pattern, we'll ask 7 questions. You have to answer any 5, each carrying 2 marks, 2 into 5, 10 marks. Then section B, we ask 4 questions. You have to answer any 2, 10 into 2, 20 marks. Section C, we ask 4 questions. You have to answer any 2, each carrying 15 marks, 15 to 2, 30, totally 60 marks. Books for reference, S.P. Gupta, S.N. Maheshwar or S.N. Maheshwari, B.S. Raman. These are all the books available. Hope you understand. We'll go in detail in the next session about the cost of capital, how to solve the problem on cost of capital. We'll go very detailed in the next session. Till then, goodbye. Meet in the next session.